Okay, so we got a question on YouTube, and the individual said it would be interesting to get your thoughts on Nutrien on its recent pullback. So Nutrien NTR on the TSX as well as NTR on the New York Stock Exchange, currently trading at a price of $69.82 Canadian, about $34 billion market cap, and a dividend yield of about 4%. So Nutrien is the world's largest provider of crop inputs and services, playing a critical role in helping growers increase food production in a sustainable manner. And they produce and distribute approximately 27 million tons of potash, nitrogen, and phosphate products worldwide. And they have 6 potash mines in Saskatchewan. So I actually covered Nutrien back at the beginning of 2022 on the podcast when the stock traded at about $110 per share. And with a forward price to adjusted EPS multiple of about 5 times and an EV to EBITDA of about 4 times, again, forward, based off of management's fiscal year 2022 guidance provided in May of 2022. And in that conclusion from 2022, I said, if one believes Nutrien's management is right and that the supply demand picture will remain tight for the next few years, elevating fertilizer prices, I believe there is a reasonable case to be made that the company could offer value over the next 2 to 5 years. And again, this is based on if you trust, management's outlook on the market. But of course, throughout 2022, the company lowered its initial guidance in August and then again in November because potash prices were declining and nat gas costs were elevated, and the market wasn't as tight as management once thought. And just to show here, this is the price of potash per metric ton. I just thought that I'd pull it up quickly. So where are we today? So looking at the recent financial results for Q3 of 2023, keep in mind the results are in US dollars. So revenues were $5.6 billion, a decrease of 31% over Q3 of 2022. And this was due to lower net realized selling prices across all segments. Adjusted EPS was 35 cents per share, down 86% year over year, and adjusted EBITDA was down 56% year over year. Looking at the balance sheet, as at September 30th, 2023, they had net debt of about $13.2 billion and a trailing net debt to EBITDA multiple of just under 2 times. If we look forward, it's actually maybe just slightly above 2 times. And I also have up on my screen here the company's fiscal year 2023 guidance, which is projecting adjusted EPS of at the midpoint of $4.57 per share and adjusted EBITDA of about 6.1 billion, which represents a decline of about 65% in adjusted EPS for the year. And looking forward to the rest of 2022, the company trades at about 11 times forward adjusted EPS and with a forward EV to EBITDA multiple of about 6 times. So to conclude on Nutrien, fundamentally, I think that it is a good business. The company has been returning capital to shareholders through its dividend and share buybacks, paying a nice yield of over 4%, and the trailing payout ratio of adjusted earnings is about 35%. The company has long-term targets of growing potash sales to 18 million tons by 2027 and their nitrogen division to 13.5 million tons by 2027. They're also looking to use automation to help increase the efficiency for potash. I mean, we'll see how quick that translates or if it actually helps at all. The company has just about lapped its tough comparable financial results from when potash prices were elevated, and it currently trades with reasonable multiples to fiscal year 2023 guidance, in my opinion. The balance sheet remains healthy, and management expects a tighter potash market in 2024. However, note that at the beginning of 2022, management was also projecting a tight potash market for the next few years. Yet we saw that not come to truth. So overall, while we may continue to see some weaker quarters ahead in the near future, I think that a contrarian investor who is bullish on potash in general could speculate on a long-term position. The company has been increasing its production volume, but I say speculate as You know, you've heard us say this so many times, as if potash prices increase, the stock will likely do well. If potash doesn't do well, the stock will likely continue to suffer. You know, I really think that 2022 was a good case study to look at, as management was projecting a tight potash market for a few years, but ended up revising guidance lower several times when their market projections ended up being wrong, and the price of potash began to collapse. So good company, but you know, it's definitely some speculation based on the commodity risk.
Yeah, and we detail this on a weekly basis. Is certainly each month we answer questions on commodity-based businesses. We operate in Canada, and the markets are kind of saturated with these businesses. And Nutrien's a good company. If you look at the revenue growth over the long term, excellent. Predicting where the stock will be in a given year or 2-3 year period is very difficult, because even when management, who should know the business better than almost anybody, is predicting a tight market, you can have it completely go the opposite in a given year. And then the company has, an 80% drop in net income, and the share price just performs, very poorly over that period. Very difficult when, the management team is, and I'm not even saying they're doing a bad job here. It's difficult for them to forecast, but they're forecasting one thing and it goes the complete opposite way, and they're revising lower guidance within a year. That's how tough it is to forecast that business. That's why it's very difficult within a given year to forecast where cash flows will be. That's why it makes it difficult, because we price stocks off their cash flow going forward. It's very difficult to put a fair value on a company like this.
Yeah.
Get questions on them all the time, but it's very difficult to value them.
Yeah, one thing,
to be honest,
that I would like to say as well is, like, if you do look in their MD&A, they've got like a price sensitivity. So, just showing how much EPS or adjusted EPS might change based on the commodity price. So, you can kind of try to see what your upside or your downside is based on this as well. But sorry, Brett, did I cut you off there?
Yeah, I was just going to comment on the really big thing about commodity companies, which you need to watch out for, is how much of it is just really comes down to is how much is out of management's hands, no matter what they do. So in this case, it was what caused their big increase in 2022 was the Ukraine war. That's what caused potash to go up, and obviously it's effectively new ground for them to forecast. Even they don't know how sanctions are going to go and how the new supply network is going to work out. And that's what it comes down to, is these big macro events can just completely obliterate you in a commodity market. And it obviously did in this case.
Exactly.
And just completely impossible to predict, right? And and those events have a huge effect on the business. And then it's also difficult, even after it's happened, to predict the lasting effect of it, because everybody thought, well, this is going to go on for 3, 4, 5 years, and you had a spike in prices, then a precipitous drop in prices.
Yeah, and that's the thing where we have talked before. You have taught us that, when you're looking at some of these commodity-based businesses, it's almost like counter-cyclical. When the valuation is getting really low, that might not technically be the time that you want to buy it, because commodity prices are potentially high. Again, like it's tough to gauge.
For sure, which is difficult for us to then invest in, because we're looking at cash flow, and the best time to invest in them was when they have negative cash flow, potentially, right? Like I've seen people play that in the past, but you're making more of a bet than or an educated guess, more than just looking at the numbers behind the business and projecting a growth rate of that going forward, and seeing if you're paying a reasonable price, which it's difficult enough to do, but I can quantify that more than I can quantify. Like, if you had some specific insight into the price of potash over the course of the next 3 to 5 years, you'd do better in a company like this than if you knew, or tried to predict their cash flow. It's the direction of the price of the commodity is going to have the biggest effect. And if you knew that, which is just almost impossible to guess. So that's where we say, if there's a low likelihood or probability to be able to understand where the commodity is, then it's very difficult to value the business based on cash flow.